In this calculation, to calculate the accrued earning before tax, let's take a look. Feng Corporation restates its financial statement using the accrual method of accounting, although it keeps its accounting records on a cash basis. In year 2, the firm's cash basis pre-tax income was 60. Regarding the operations of the firm for the years ended December 31, year 2 and year 1, the following details apply. Year 2 and year 1, account receivable is 40 in year 2 and 20 in year 1. Account payable is 15 in year 2 and 30 in year 1. What amount of income before taxes should the firm reported on its December 31, year 2 income statement under the accrued method? So in this calculation, as we mentioned, it's calculated earning before tax. It's EBT. It's also called income before taxes and also pre-tax income. It's all the same meaning. It's given EBT cash basis is 60. And it's asked to calculate the accrual. Same concept like we calculate from the net income. It's the item on the P&L, the last item in the P&L. Converted net income from the cash flow of operating. So here is from the P&L, we converted to a cash flow statement. It's the same methodology. There are two big categories we can do adjustment. The first one is called items on the P&L. It's non-cash expenses. The typical one is depreciation and amortization. It's non-cash expenses. The payment is done at the very beginning in the cash flow of investing. So it never goes to operating. This one is deducted in the profit and loss, and we arrive at net income. So now we need to back it up. So we plus. In this calculation, we didn't mention any information regarding the items in the P&L. So this category we don't calculate. The second one is we call it working capital. Working capital means the current asset and the current liability. In this calculation, the typical one is account receivable. Account receivable is for current asset, and account payable is for current liability. We use year 2 minus year 1. It's always use year 2 number to minus the year 1 number. So the next question is what's the sign, the plus or is minus? We use the journal entry to better understand this concept. For the account receivable, we debit AR, account receivable, credit, sales, or we call it revenue. So when the company sold to customer on a credit basis, the revenue is increased. The revenue is will increase the net income. It's the first item in the P&L. So the net income will be the same sign with the revenue. And the account receivable is the same sign with the revenue. So the account receivable is increased. The net income is also increased. Now we are back up from the net income to cash flow of operating. The credit sales, we didn't get cash, so we need to back it out. So for the AR, year 2 minus year 1, we use the minus sign. Now we use another journal entry to better understand the account payable. When we pay account payable, debit account payable and credit cash. So the cash is from the balance sheet, is a decrease, and account payable is also decrease. So when we do the reconciliation from the net income to CFO, we need to have the same sign. When the account payable increase means the company do not pay out cash. The cash is, on the contrary, is increase. Since we have the plus and the minus sign, now we give it a number. For the year 2 minus year 1 is 40 minus 20 is 20k left over. For the account payable, year 2 minus year 1 is negative 15k. Now let's do the reconciliation. The cash flow of operating is similar to earning before tax cash basis. This number is given is 60. Now we calculate earning before tax accrual. It's like a net income. So we net income or the earning before tax accrual minus 20k is the year 2 minus year 1, and also is minus 15k is AP year 2 minus year 1. So now we calculate the equal to 60k. We calculate the earning before accrual, we need to back up. So here will be plus 15 plus 20. Here is 60. The accrual is 95k. The answer to this question is D.